steadily grown over that, as Gaurav said, since 2012. So we've almost had 12 years plus of business growth as well. So on the basis of feedback in from anchor investors, we priced the transaction within this range at the likely at the top end.
Hi, I'm Imhadri from Economic Times here on your right. You have cut the IPO size by 18%. What's the rationale behind that? Earlier it was supposed to be 1,000 crore IPO and now it's 820 crores.
Yeah, that again is the primary component that we had filed with. I think just you are regulatory allowed to up to 20% to cut, just given where the nature of the markets and the use of proceeds effectively that the company has. It's a small amount that has been effectively cut. Nothing to really much read about it except for the fact that it's something small on the primary side, and the company has enough. It's a cash generating business. It is profitable, so it'll effectively it's in line with the use of proceeds for the company in the next coming few years.
Sir, good afternoon, team BlueStone. I'm Mehul Dani from FinTech Biz News. Please explain how do you deploy various technologies to drive the business growth, and what are your strategies to expand in Tier 2 and Tier 3 cities going forward? Thanks.
See, so technology-wise, if you look at our first 7 years were spent in kind of pushing it very hard to sell jewelry online. Now, what that resulted in was that gave us extremely sharp design positioning. It actually gives us very, very efficient systems. Things like you place an order from Bombay, and that design is, let's say, present in Calcutta, and for whatever reason the system decides to prioritize that ready inventory over manufacturing. Now it can do it for several reasons. It can do it because it feels that it's going to be a slow moving inventory. So how about we use the same inventory to fulfill that order? If it's a fast moving inventory, the system might decide that okay, we'll manufacture it in Bombay and then ship it. So I'm saying a lot of this decision making, and which is also machine driven, actually makes it very, very, very efficient. And the focus has generally been to use technology so operationally we're using a lot of technology in the last three to 4 years. Even the higher level decision making functions are being taken by machines. If you look at our corporate overheads, those would be some of the lowest in the industry. I'm saying look at the absolute number because our top line is still growing at a very, very rapid rate. So in terms of using technology, I think we think technology first. Any problem that comes to us, our first port of call is technology, not throwing people at it. That's a fundamental nature. Be it merchandising. For example, we have zero merchandisers in the company. Look at any company with 275 stores, they would have an army of merchandisers taking calls on Excel sheets. We don't have Excel sheets today to decide which design is good, which design is not good, because all that is data driven. And when there is data, the state of machines is evolved to that level that machines can take a better call on that data than any human. You won't see a lot of jewelry companies talking this language because we deal in jewelry, all right, but we are a tech first company. We are driven by technology. Coming to tier 2, tier 3, so our approach is, a lot of companies would talk about that there is regional design preferences, we do that, etc., etc. We are not actually focused on that. We have a very strong brand voice. We say that okay, these are the designs that we stand for, the kind of products we want to offer, and in whichever city we go to and whichever region we go to, there are takers for those. And I'm saying regional preferences, regional choices, traditional choices. Historically, traditional choices have well been taken care of by almost all the players in the industry. But for those 5% people who wanted differentiated designs, or 10% people who wanted differentiated designs, no one is serving them. In fact, I had heard from a lot of women that they don't want to wear jewelry or fine jewelry, gold and diamond jewelry, because they have better taste or they have more evolved taste, and gold and diamond is very traditional. Right? It need not be the case. The gold and diamond jewelry can also have high fashion element to it. So I think that is what we bring on the table, and we find enough and more takers in tier 2 and tier 3 cities also. And technology is how we reach. And we have never done any outdoor, at least in the last 2 to 3 years. You would not have seen any of our billboards. You would never have seen a print ad. You would have never seen a TV ad. right? Yet we are going very, very strongly. You would not have seen any brand ambassador shouting on the top of our lungs that buy BlueStone jewelry. No one does that. It's the designs who are our heroes, and they are pulling people from all over, from all walks of life.
This is Prithvi from VC Circle. With the advent of lab-grown diamonds, how have you recalibrated your business strategy around it? And if you can also throw some light on how has it kind of changed consumer patterns within your business that you can observe, and what are the revenues that come from this particular segment?
Yeah, so we don't operate in lab grown. I think one of the strongest signals that we were seeing in the kind of space we operate was people did not want. People prefer natural diamond over lab grown. So what happens is, lab grown is still being played out in India. I think in Western market there are some signs of it, but then India in jewelry is not a market that follows West. India has its own taste of jewelry. India has its own categories, subcategories that are non-existent throughout the world. In India, jewelry was a category 200 years back also. In Western societies, jewelry was not even a category 200 years back. Engagement ring is a very recent phenomenon, which is what, let's say, bulk of the US market is. And that engagement ring is a big solitaire and then just 3 or 4 shank and 3 or 4 prongs holding it. Now that is where lab-grown had a play, and lab-grown played it out in the US market. But India's solitaire is a fringe category, it's not more than 2 to 3% of the overall market. If you talk about $80 to $100 billion market, 2 to 3% of that is still $2 to $3 billion market. It's a huge market for, let's say, entrants, for people to play that lab-grown game. But I'm saying 97% of that market is not a solitaire market. And you can look around also. Most of the jewelry, almost all the women in the room are wearing jewelry, almost all the jewelry that you're wearing does not have a solitaire. And when you're talking about, and there the diamonds that are used are smaller diamonds because diamonds are not the product. Diamonds are part of the design. Those are there to actually accentuate that design. You buy a design which has diamond because diamond is just making the design even richer. When you look at that diamond and when you look at the price points of, let's say, the cost difference between natural and lab grown, you will find that there's hardly any price difference. Now, for no price difference, would you buy natural diamond or lab grown diamond? Most of the people want to buy natural. And it's not just us. I think it's there in every in Tanish conference calls or investor calls also, that the impact that is there in bigger size diamonds, and smaller size diamonds, which is the bread and butter of this category, there is no impact, and we continue to see that. We have customers walking into our stores, and the first statement, "Ye lab grown nahi hai," and then they start interacting with the category. So I'm saying that both the things are different. I'm saying that game is being played in a 2 to 3 billion categories. We don't see any spillover of that. Anyway.
Hello, this is Babita from Times Global News. My question is, what are BlueStone's key strengths and competitive as compared to the competitors, both traditional and online? And how do you maintain a competitive edge in the evolving market?
So we have a very different way of dealing with this category. Right? So traditionally, if you see, people have generally played on price, commodity products like coins, chains, bangles, etc. Right? We generally not had that kind of approach. We started as we have a very strong technology angle. We use internet way more efficiently than how incumbents use, right? So if you talk about competition, there are 2 types of competition. One is, let's say, competition with the traditional or incumbents or traditional companies. The way we do business, the facets on which we build the business are extremely different. That is reflected in our much higher gross margins also, which are reflected in our very high repeat ratios also, which are also reflected in the way people buy from me. People hardly anyone you would see who walks to the store does not know what our offerings are. Almost all our customers, or customers especially who are heavy customers, they know about a lot of our offerings, even if they have not bought it. If I ask you to tell me about 5 Tanish designs that you have not bought, you would have no idea. Right? That's not the case with us, because people can interact with us, people can experience us, people can see us without being forced to buy. They do that a lot. But so fundamentally we are very different, and I de-emphasized, that's reflected in our superior unit economics also. And secondly, let's say other people who do business this way, and there it's just us and Capital, and both have done phenomenally. But at the same time, both are such a small percentage of the overall market that the room for both of us to grow is significant. Combined revenues would be less than $1 billion in a $100 billion market.
Thank you.
Very good afternoon, Gauravji and respected DICE member. This is Reena Shukla, director of Hira Sabrak magazine. And first of all the very best and many congratulations to all. And my question is, as per the market position and competition, how Blue Lotus itself compete jewelry in India? Okay, and what strategy does the company employs to stay ahead of competition? And second question is, now many IPOs companies in the stock market. So how unique your IPO and what is the benefits to your employees and consumers?
Sure. So I think in terms of our differentiation, I've covered it when I was presenting, and I think in response to some of these questions also. So I'll directly jump over to the second question, which is essentially with respect to other IPOs, etc. I think one of the things you should look at is the fundamental depth in this particular category. Right? You look at a lot of categories, and you'd see that even the market leader will start capping out. Right? There's a certain ceiling that you would hit. This is a category that knows no ceiling. And if you look at Tanishq and at 50,000 crore, they grow at 20% to 60,000 crore. That doesn't happen in any other categories, right? Fundamentally, the kind of depth and the kind of size this category has, no other category has. Even let's say when you look at a lot of other D2C players, a lot of new age companies which are coming across categories. So I think one needs to take a call whether you want to. So D2C is D2C. We are also doing D2C. Someone is doing it in beauty products. Someone is doing it in eyewear. Someone is doing it in some other categories, right? But I think fundamentally you need to, if you take a long-term call on which is the category which is not going to stop for next 10 years or 20 years, which is going to be that category. If you go back to year 2004 and you were to kind of look at Tanishq, or you were to look at, let's say, Shopper Stop, which company in hindsight you would have invested in?
Thank you.
Yeah, Lokesh Shastri again. So you have a very impressive growth of almost 40%, yet there are revenue losses that we see currently. So could you explain how we are able to manage this, and what is the reason for this?
Yeah, hi. So as Gaurav had mentioned that there has been a significant amount of investment in new stores. So our store addition has seen a J-curve over the last 3 to 4 years. So it takes time for stores to build fully build operating leverage, and thus at an EBITDA level, obviously we are profitable and generating significant amount of EBITDA. And as the store cohort starts to see a lot more maturity, the current capital employed in the business will keep getting more productive, and that should continue to drive operating leverage in the business.
So when can we see some profitability on the balance sheet? Next 2 years or 5 years?
See, I think we can't talk about a forward-looking number. Let's just look at it in a bit more different way. Companies already at 1770 crores. The past growth rate is shown to you. The mature store margins is shown to you. The gross margins is shown to you. Few things which is important to kind of not overlook is this is growing at 30% plus SSSG and having the highest gross margins. Very few companies can achieve the best of growth rate and best of the margins, and this company has shown it. Even at a store level, we have kind of talked about the margins that we have and how the store ramp up has happened over the last few years. Again, that data is publicly available, and the proceeds which is predominantly going into working capital or going to fund the inventory. So structurally, if we were to kind of look at it, there is a meaningful capital employed and there is a steady state profitability. The trend on corporate overheads is there for you to see, and I think the trend gets a bit more evident, and that is the reason why we have a really strong anchor book which you would see on Friday. This answers some of the questions on pricing as well as how do we see the profitability of the company going forward.
And what is the percentage of promoters holdings pre-IPO and post-IPO?
Yeah, so post IPO, it is going to be between 16.17 to 16.005, depending on the price band.
Hi, this is Sonia from Ranchers. Can you share what's your approach to sustainability?
Yeah, so I think one of the key focus areas, and specifically in this category, is on the old gold exchange side. So we see that obviously Indians hold a large amount of gold, and our business model, our product stack lends itself very nicely to women coming and exchanging the traditional jewelry or the traditional gold jewelry that they have. And there has been a lot of emphasis and focus to bring in more recycled gold. If you also see some of the programs that we have launched, which is old gold carat upgrade, is women can bring jewelry in, let's say, 18 carat, and then we give you credits in a higher caratage tier, which is again to encourage more recycling of the older jewelry. So I think that is a big focus area. And this is a specific category which can really have a large part of consumption of gold coming from recycling and exchange. So that's one of the big focus areas for us.
All right, thank you. Are you into exports as well?
No, we don't have any exports.
So, who are the major shareholders besides promoters?
So some of the existing shareholders, of course, we will have great set of new shareholders joining the cap table. As we stand right now, Axel Partners, 360, there is P15 and ProSus. So there is a wide set of quite interesting shareholders that you think invest. So it's a long list. So there are a lot of prolific investors who many companies would love to have on cap table post listing, which the company is already kind of blessed to have it pre-listed.
Can we have the breakup?
It's there. All the documents I mentioned. InfoEdge is also a large shareholder, as you know, that they have been large holders of a lot of the other new age tech companies that are doing really well. So it's all mentioned in the document of each investor and how much do they currently hold, and in fact, the selling shareholders and how much they will hold even after that.
Sir, what is the revenue share coming from millennials and other young age groups compared to coming from bit older ones?
So we are very strong in 25 to 45 year old age group. I don't have very specific breakdown beyond that that I can share right now. But our appeal in that age group is very, very strong.
Can you share some trends from the tier 2 and the tier 3 cities?
From?
Tier 2 and tier 3. Preferences.
In the sense,
Design preferences.
yeah, so we have few slides on that, few cities. So this is Ranchi. When we were online only in Ranchi, we were doing close to 7 million or 70 lakh rupees in annual revenues in that city. I think over 2 years we opened 2 stores there, and that 70 lakh revenue reached 12.6 crore. And like I said, they continue to grow very strongly. And then we have one more example of Lucknow, where we, by FY22, we already had 2 stores. So Ranchi was late to the party, but Lucknow was not. So Lucknow already had 2 stores doing 7.5 crore. We expanded more, so we opened 4 more stores, and that 7.5 crore revenue reached 40 crore in just 2 years. So that's the kind of growth we are seeing at city level also in many of these cities.
Thank you.
This is Sachin from Global Prime News. Can you throw some light on your tech investments?
so we continue to do that. We continue to build sharper and sharper systems. For example, one of the systems that we are working on currently is on how do we create, let's say, warmer relationships with customers at a store level. Right? A lot of people use the existing CRMs, etc., to build and have a call center. So that on a website, if you have a query, you actually dial a call center, and then let's say someone sitting in Bangalore is answering questions of someone sitting in Kanpur, and the contextuality is lost, the relationship is lost. So I think in order to handle a lot of those things, what we have built is an in-house system which actually distributes it, which makes the people working locally in that particular city also answerable to queries, questions, issues in that particular city. So when you do that, first of all, the contextuality, etc., is significantly higher, and then you're also able to relate, right? You're talking the same tone. That itself makes a huge difference when you end up building long-term relationships. So I think this is just one example of it is something that we are building. The entire merchandising automation, entire merchandising automated, entire website is managed in-house. We've done multiple iterations of that also in app also. So a lot of things at a fundamental level, a lot of subsystems at a fundamental level we keep on working on. Many of those kind of very generic, not jewelry specific, a lot of those jewelry specific also. So entire technology team consists of mostly guys from top engineering colleges like IIT, etc.
Thank you.
What does the term BlueStone signify?
I think it's just lack of creativity for me, on my part.
No, it's nice.
How does BlueStone improve profitability and how do you improve profitability?
Yeah, so as I also mentioned in the earlier question, I think a lot of our investments in the business in terms of the new store additions, etc., have gone in over the last 2 to 3 years. So you've looked at the fundamental profitability of the business, which is the unit economics that we've demonstrated in the business from stores which have some vintage, are already at 23-24% store level EBITDA margins. And thus it is just about giving more time from a vintage perspective, and the operating leverage will start to play out, and it's already starting to play out. And as is visible in our if you look at our FY22 performance, FY23, 24, 25, there has been consistent improvement at the EBITDA level. So we are already starting to see that at the operating level, and more of it will come as vintage, etc., kind of plays out in the business.